And I'll give you all a quick introduction of myself and, of course, Kshitij as well. So many of you would be familiar that I am heading the community at Razorpay Rize. I'm Aditi, and of course, I have another Aditi from my team here who's heading the Rize program as a whole. But Rize essentially is about three things. One is we help you get started through your company corporation. Another, we help you get started through providing you access to the tools. And the third thing that really matters to us on the top of all of it is the Rize community, which is a founder specific community. I see many founders from the community here, but for those of you who are not a part of it, I think you should check out the website. I think Aditi can help you with that. And you should definitely have a look at the program. But apart from that, coming on Kshitij's introduction, so I don't think that Elevation needs an introduction of its own. I think it has been one of the leading VC firms globally throughout the past year. Kshitij has been an investor there from past 3 years at Elevation. He specifically looks after fintech and Web3. Before coming to Elevation, Kshitij was consulting with Bain and company. And yeah, I think I would give it over to Kshitij now. He would walk us more in details of what his work involves. And of course, the really important aspect of this session today is to talk about how powerful stories can be told through compelling pitch decks. Because I think throughout his journey at Elevation, Kshitij has experienced a lot of amazing stories from the startup ecosystem to be building for the likes of Misho, Unacademy, Polygon, and many more. Of course, many rising startups as well. So over to you, Kshitij, and I think we can get it from there.
Awesome. Thanks a lot, Aditi, for the introduction. Hi, everyone. Great to meet you guys. Some of you are familiar for me as well. We would have spoken earlier, or we might have interacted in different contexts. Let me just start off. What we can do is I can go through the presentation, and maybe towards the end, we can cover questions that you guys may have. Uh, Let me begin with an introduction of Elevation and myself, and then go into the content of the deck. So if some of you may be knowing already, Elevation is a seed Series A focused fund. We just recently raised our eighth fund of $670 million last week, and have been investing in India for the last 2 decades. Most of these investments you see in the slide are companies that we have invested at seed or Series A. So we love coming in at early stages into startups and staying there in the long run and helping them grow. Just a few pointers on our philosophy. So the first thing that we believe, all of this is on our website as well, but just to sort of reiterate, first thing that we strongly believe is that we want to partner with startups from day one. So it's never early to reach out to us. Personally, many of the investments that I've been involved with have been companies that we invested in at paper plan before the founders left their jobs, or pre-launch, pre-revenue. So a lot of anecdotes that we have there. Second point, which is fairly important, is that we don't make any competing investments. So we are one of one. We try to identify the best companies in a sector or subsector and partner with them and go all in their journey, right? So we would like to invest in the companies that we believe in, make high conviction quality bets, and continue to partner with them over a long tenure. So many of the companies and logos that you've seen earlier in the previous slide would have been companies that we have partnered with over the last 5, 6, 10 years plus as well, right? So this is something on our philosophy. Little bit of an introduction just to add what Aditi said. I've been at Elevation for more than 3 years now, looking at early stage investments across the fintech and Web3 space. Some of the logos below are companies that I had been involved during my tenure here in terms of investment, and also closely work with in terms of portfolio. So across fintech, we have Cashflow, Deserve, FamPay, MyBillBook, which is Flowbiz, Detect, Mintify, and some of the Web3 investments that we've made over last year as well, including Pillow Fund, Polygon, Brine Finance, right? So again, most of these investments have again been at very early stages, so seed, Series A, Series B at max, but that's a spectrum that we focus across. Great, so I'll just move on to the content of the deck. So what I've done here is I'll start with a little bit of a framework in terms of how I believe compelling pitch decks are made. seeing a bunch of them across my tenure at Bain and Consulting, and also meeting a lot of early stage founders at Elevation. And then we'll go more step by step into uh, those individual elements and give you some examples either from India in terms of some of our portfolio companies who have been kind enough to allow me to share some of their slides, and also globally some of the big companies that you might be knowing, how their early stages worked, what was their pitch decks like, right? Just to bring these points to light. And then towards the end, I'll cover a little bit on things that help in terms of the pitch or the story itself, and then we can head into Q&A. Great. So I think the first point that's super important for any pitch deck is just to begin with a concise one-line recalled kind of introduction, right? And we can go into more examples, but these are just the very, very first or second slide, which just encapsulates the vision of the business and presents in one line what this company is about. Second point, which is important, is just captivating your audience. And again, we can go deeper into this, but it's super important to really hook your audience at the beginning to get them to listen to you and stay focused throughout the presentation, right? I think once you have the audience's attention, it's about going deeper into your insight and product and what the results of those insights and product are in terms of current execution, current metrics, customer love, etc. Then we should definitely cover a little bit on the team and why we are special, and concluding with a little bit of our ambition and aspiration and what we aspire to be, right? So let's maybe start with the introduction aspect, right? So just about introducing yourself concisely as a startup. So I think the main objective here is just creating one line recall, right? And that involves like three elements, which is just asserting what the business stands for, succinctly explaining what we do, and just encapsulating our vision. So I'll go on to some examples which will really help you to bring this to light, and then we can go into specific questions later on as well. So see, look at couple of these slides that I found. On one on the left hand side is Airbnb, right? They were pitched as Air Bed and Breakfast back in their early pitch deck. So what they talk about is book rooms with locals rather than hotels. On the right, we have N26, which is probably close to a Decacon today. It's a European mobile first neobank. And super simple, but encapsulates the vision very well, asserts what the business does. So just building the first global mobile bank, right? Sorry. We have Coinbase on the left, which back when they were raising in 2012, focused on the Bitcoin prices rising and transaction volume rising, and it was about your hosted Bitcoin wallet. Again, I wouldn't say this is the best example of encapsulating the vision in terms of where they are today. But at the same time, you know, for the time that they were raising, this is how they sort of asserted what the business is and explained what they were doing. Revolut, which is another mobile first neobank today in Europe and US, their line was personal money cloud, right? Again, this was when they were raising 2 million in terms of their seed round. These are a couple of examples from our portfolio. On the left, we have Detect. So they are in the industrial IoT space, and super crisp one-liner which just says we make industries intelligent globally, right? And we have Pillow Fund on the right, which is Web3 for everyone. Their overall vision is to get a lot of users to come into crypto and transact, but keep the interface very user-friendly and abstracted away from the complexities of crypto, right? So I think just looking at these examples, I think the main point is just going back, right? There's just three aspects to remember when you introduce very concisely, just encapsulate your vision very clearly, succinctly explain what the business is about, and assert what you're doing, right? And that's about it. I think the second point is just about captivating your audience, right? Why should I listen? Why should I spend the next 30 minutes, 1 hour listening to your pitch, right? So I think any startup, any founder in the first sort of 5-10 minutes need to completely grab the attention of the audience. And there are 2 or 3 ways that you can do this, right? I think the main question to answer is what is extraordinary about your startup, right? And if you push yourself to think like that, you will automatically float the best of the best insights that you have, or the best of the best metrics you have, or the best of the best in areas that you have identified have, and float it up, right? So I think you just begin with that captivating insight on what's extraordinary. So I think one way to do it is just highlighting deep user engagement or any of your best product market fit metrics if you have already launched and have some metrics, right? So for example, if you look at the $500,000 that dollar check that Facebook raised from Peter Thiel, this was one of their opening slides. I'll give you guys a minute to read this, but it's a quote from Stanford Daily. It says, classes are being skipped, work is ignored, students are spending hours and hours in front of their computer in utter fascination. The Facebook craze has swept through campus, right? And just imagine anyone, investor or not, reading this as the first sort of slide of any deck. You're automatically captivated to understand more about what these guys are doing to get this kind of engagement, right? The second point here, I think what you can do is show stellar growth or deep customer validation, right? That's another way to really talk about what's extraordinary about your startup. On the left, we have Monzo, which is another neobank, which this is a little bit maybe a Series B or Series C sort of race for them. But they spoke about how they grew from 0 to 120K users, funded accounts within a year, right? And if you look at the subtext, it's about organic social channel, word of mouth referrals at zero cost per acquisition, which is very, very impressive, right? It's probably one of the most impressive metrics that they have. So if I say 120K accounts at zero CAC, that's super captivating. And I want to hear more about how they got to where they are, right? And what's the magic behind this. On the right, we have Detect, which is another portfolio companies of ours. And this is a slide that we had made. So they're the only Indian tech enterprise to sign global enterprise deals with Shell, Vedanta, and BSF. Now, when you put logos like that and talk about enterprise deals with these kind of conglomerates, automatically there is something to this business that I need to understand, right? If they have deep customer validation from major players in an industry where they're not only major, but also the market leaders, and they've signed global contracts with this startup, I need to know more, right? The third thing you can do is to paint a very severe pain point, right? Again, I'll talk about a few examples through which you can captivate your audience by painting a severe pain point. So on the left, you have Brex, which again was raising their Series C, if I'm not wrong. This is the sort of opening slide they had, one of the opening slides, right? Entrepreneurs can't get credit cards. On the Amex circle, it says that please call customer care, who will make a decision on you whether to give you a credit card or not. The Chase one says it may take up to 30 days to give you a decision on your credit limit. Capital One says something like, you need a personal guarantee, and we do not fund unprofitable businesses today or give them corporate credit, right? So this is something. So the one line which is captivating, like entrepreneurs can't get credit cards, which is again very interesting, makes me want to know more. And here I've sort of highlighted three big logos in the banking industry who are not able to serve this audience, right? uh, Again, gets me captivated, wants me to know more. On the right, I don't know if you can tell already, this is Dropbox 1.2 million seat deck from 2007, right? And it's just saying storage is a mess, and that visual is irritating enough for anyone to really understand what problem they're solving, right? So I think this is another way to sort of really captivate your audience. So just to sort of go back, I think three ways to do it that I figured is, okay, I have a couple more examples. So on the left, we have Oscar Insurance, which is a US based sort of health insurance company. It's probably around 8 billion valuation at IPO. So very interesting opening slide. Health insurance was the worst, right? Just completely explains that they are doing something interesting, which is changing this industry. And on the right, we have again N26, which is the mobile-based neobank that says 7 out of 10 millennials would rather visit their dentist. Uh, so keeps the audience hungry. Things like this wants you to know more. and wants you to say more about what you're building, right? Uh, so now that you got people listening, I think what the important thing to do here is that you need to go deeper, right? We need to go deeper into the insight and the product. So you have introduced yourself, you have captivated your audience with some outlandish statistic that you have, or insight you have, or the growth you have shown, or the customer validation you've shown, or the pain point you're solving for, right? Now you need to go deeper into the meat of the tech and really show why what insights do you stand for, and what product, and why your product will win, right? So I think, again, like, few things to answer in this section, right? And this becomes a fairly important section for you to really show that the problem statement you're solving is deep and your approach is superior to others, right? So what do we see in the market that others don't? What is our counterintuitive insight, or what is the insight that we have that others are just not able to see? Or even if they do see it, what is different about our approach to solve this, right? What is, or maybe the approach today is just a wedge that we are starting with, and that wedge unlocks a larger opportunity that we are solving, right? So I think questions to answer is, again, what is our differentiated insight and why will we win, right? And how big an opportunity does this solve once we do unlock, once we are able to sort of unlock the right fit for our product, right? So again, I'll go through a few examples, right? We spoke about Brex captivating their audience with entrepreneurs can't get credit cards, right? And again, there are three big pain points highlighted here with Amex, Chase, and Capital One, which just don't serve an entrepreneur to give corporate credit. And on the right, you have another sort of status quo solution, right? Which is, today's credit cards are quick and efficient, but if an employee just uses a personal credit card, it needs a post spend approval, right? Like, I need to submit a bill to my finance team and get sort of approvals, and then that creates account payable headaches for the finance team, which is laborious and uses multiple systems, right? So both of these are, today I am identifying an opportunity that corporate credit for startups is a white space, right? And even the existing solution of a credit card does not suffice. So what they are going to do is initially focus on tech companies. Why? Because they could be cash rich in their early life cycles. Legacy companies won't extend credit, as they showed earlier. They're big spenders on ads and digital marketing, on SaaS software, and also early adopters, right? Because they're tech companies. And over time, if you underwrite these companies well, these would be probably the next multi-billion market cap companies. So you have high growth in LTV from the set of customers, right? And very concentrated network, which is like, you can acquire a bunch of companies within a large city or a network ecosystem. So for example, you go to a YC cohort, you get a bunch of companies, right? So this is the approach, or the initial wedge for Brex, right? I'm going to focus only on tech companies and underwrite them in this way. And on the right, they go there, they show what opportunity this unlocks for them. So in the orange circle, you have US venture backed companies, which is a smaller market. And over time, you go to Fortune 500, and over time, you just unlock global B2B payments. Why not, right? I mean, that's the sort of wedge, that's a market opportunity this wedge opens up for you, right? So moving on to another example. So for Detect, which is the industrial IoT company that I spoke about, on the top left, we have massive unsolved global problem where $4.5 trillion US is lost every year because of worker safety and asset downtime, right? So this is the insight that they have seen in the market that isn't solved today, right? There is no solution out there to do asset monitoring in a way that is like a SaaS software for the safety teams to use, or even people monitoring or safety monitoring, right? So this massive unsolved global problem is giving the opportunity for Detect to come in and solve for a $90 billion TAM, right? So here they talk about what they see in the market and the opportunity unlocks. And the bottom right, I had to sort of blur out some of their product screens, but they want to build a single source of truth across industries, right? And the way they do it is the sort of differentiated solution that they have, right? If they come in with their software, with their solution, and are able to provide a holistic picture to the entire industry and reduce safety issues in any industry, I think that's how they solve it, right? And we can go deeper into some of these questions in some of these product offerings, but at least the representation is something similar to what I had mentioned earlier, right? What's the sort of insight that you have, which is differentiated? What opportunity does that unlock? And how is our approach different or wedge different from others, or why is it unique? Third example is Deserve, right? Which is another portfolio company of ours in the wealth management space. So on the top left, I think their insight has been that most investors hate investing, right? And these are the silent majority who find investing stressful because there is a lot of money to invest and a lot of choices, and there's so much allocation to do, right? So usually no one talks about something like this, and this is a way that they saw the market in terms of a silent majority finding investing stressful. And through their work, they found 76% of professionals need someone to handle their investments, right? So that's the sort of differentiated insight that they have. And on the top right, they talk a little bit about their solution and pitch to the customer, right? Like, it's your money and our expertise that we'll build for the long run. So you reduce complexity through lower number of decisions. You give access to multiple asset classes in one platform. You give access to experts if needed, who are real experts that you can talk to, and also give updates to the customers in an async manner, right? So this becomes the only portfolio you ever need, which is an integrated portfolio approach, which is what IPA stands for, right? Which is multi-asset and actively managed. And users just really find it easy to invest. So average transaction time is under 1.5 minutes, and repeat investments take less than a minute, right? So very clear in terms of what that differentiated insight is, which is saying most investors don't like investing and need someone to manage their money, and a solution which is differentiated to do that digitally, and also provide something that solves for what the investor needs, but also gives a tech-based sort of solution to build that out. And the last example I have here is this is mixed panel sort of deck when they raise 65 million from A16Z, right? They're probably a unicorn today. They are a unicorn today, valued at $1.1 billion or so. But just see the sort of sentences that they've used, right? So the problem today is that people make decisions by guessing or using their gut, and they'll be lucky or wrong. And on the right, it's like companies measure bullshit metrics like page views and installs. It's hard to be sophisticated, right? So there's a combination of their like differentiated insight and also a way to captivate the audience. And the bottom, they have their solution, which is they've built an analytics software for product and marketing. And the opportunity that unlocks is, as we build for product and marketing and penetrate organizations, we will also build for software for sales and finance next. So the wedge is through product and marketing, and then over time, the opportunity that unlocks is the sales and finance functions, right? And on the bottom right, you have basically the competitive advantage. So this is a 2014 deck. So in 2010, they built a sophisticated database, which was much better than status quo in terms of analytics and querying. And that's the reason that they're able to win clients today, right? So again, it's that very similar flow of talking about what the differentiated insight is, and like talking a little bit about their product and approach and wedge and what opportunity that unlocks and why they will win. I think just a few interesting ways to represent products. I found a couple of these global neobanks who talk about using different global examples, talk about how they are bundling everything in one app. So N26 is Robinhood plus Raisin plus TransferWise plus Amazon in one. Tinkoff, which is another Russian neobank on the right, also talk about like they have an offering for consumers, which is Revolut plus N26. They have an SME offering, which is Brex plus Stripe, and so on and so forth, right? So again, this is a way for you to show how your product can be differentiated and what your approach is. Maybe in some ways it could be more about bundling and offering multiple offers, offering multiple products in one platform, or in some cases it could be starting with a smaller wedge which leads to a larger opportunity. I think now that there is like clarity on our insights and our product, right, and why they're differentiated and why we will win, I think it's super important to come back and talk about what is the result of our insight and product, right? And where has our insight and product led us, right? So this is all about execution and our business model and our financials and economics, right? So I think few things that I have put down here, obviously it could vary business to business, but I think it's important to showcase at early stages, at least, if you're going to solve for a massive market and get to a large outcome, then it's important to sorry, can you go on mute?
I'll just mute everyone. Yes.
Sorry. So yeah, as I was saying, I think it's very important to talk about where our insights and product have led us, right? So all about execution, and why growth metrics really matter is if you take the long-term view of that we're going to build a large product in a large market and deliver a large size of outcome, right? Then at an early stage at Series A, we should be growing fast, right? If we have product market fit. So that's why it becomes very important to focus on growth metrics. So I'll give you an example. So this is LinkedIn's Series B pitch from 2004, right? On the left, they showed the growth metrics. The blue line that they have is the growth projection they had in their Series A deck, and the green line is what they actually delivered by Series B, right? And again, like quotes to sort of validate, like it's become the internet's largest online business network. It's only meant for professional business purposes, right? On the right, it sort of double clicks a little bit on their growth metrics. It's not only growing very fast, but taking share away from any and every competitor, right? I don't think these are names any of us recognize today. But basically they show the sort of online professional network tools and how LinkedIn is taking market share away. So LinkedIn has the highest rate of adoption, and share has increased from 54% to 73% in just 6 months, right? So this is like, there is some sort of insight and product differentiation I have, which has led to phenomenal outlier growth and potential to be a market leader, right? If not already one. I think the other thing to do, like apart from focus on growth and metrics, could be showing superlative customer love, right? Which is like, again, like I'm not putting exacts here, but on the left, you have one of our portfolio companies at early stages, which is talk about how their impact has led to superlative customer love and success, and talking about quotes from enterprise clients and testimonial videos that people have shot for them, even without them asking, and uploading it, right? And on the right, we have another company which talks about how strongly their community has grown, and some of the anecdotal sort of feedback that they've received on Twitter and LinkedIn and other social media channels, where people have just shared their product, talking about customer and talking about how great it is, right? I think the third thing you can do is, third thing I think you should do and focus on if you have some traction, is just show your financials and unit economics. And I think a few other aspects can also apply here in terms of where insights and product have led us. But these are just like sort of 2-3 aspects which are representative, right? Again, a couple of examples. One on the top left is Brex. So again, they talk about their unit economics across rounds. So how monthly spend per card transitions from stage to stage, because they're able to target, if you remember that previous slide, they're able to target early stage tech companies, go into Fortune 500, and then do B2B payments, right? So this sort of ties back to that in some way. So where they say in seed, our monthly spend per card would be 6,500. Over time, it will go to 50K, 250K, and go up to $1.5 million by the time they're in Series D, or sorry, by the time yeah, they're in Series D. And talk about like revenues, profits, LTV of the customer, assuming churn as well, right? And talk about an example customer across stages. In the bottom right, we have Square app, which is in the payment space in the US. It's called Block now. This is one of their public investor presentations that they release. So this is just like a gross profit, cohort-wise gross profit. So this just talks about how each cohort of customers onboarded in 2019 in dark gray, how their profits are rising. In pre-2015, how their profits are rising. 2016, in how their profits are rising. 2017, how their profits are rising. So it just shows how phenomenal this business is, because for that cohort of customers acquired 2-3 years back, they continue to generate profit year on year, and they keep growing, right? So just shows how healthy this business can be. I think once you've sort of now coming towards the end of sort of pitch deck, right? So which is just about, we have introduced ourselves, we have hooked our audience in terms of something that stands out about us, gone deeper in terms of our insight and product, spoken about the execution as a result of our insight and product. And I think either here or sometimes at the beginning also, you can talk about why our team is special, right? I think few pointers here is, I think couple of things you can talk about is just the founding team, which is highlighting the depth of experience in the space. And even if you're not from the space, you're building in any sort of past success that you may have had would be helpful to understand, right? Like maybe you did a small experiment in college or in your previous job, which became very big, or any sort of entrepreneurial hustly kind of activities you might have done in the past can really help here. And second aspect is also like founder market fit, right? Like why you poised to do well in the space, and whatever your reasons to believe that are, maybe it's the insights that you have through the research that you have done, it's the sort of empathy you have to the customers you're serving, or it could be just the sort of way you see things and the pain point you want to solve. But I think it's very important to highlight why you or your team is best fit to solve this, right? And finding creative ways to highlight first level or second level teams caliber can also be quite strong. And a way to, like an example way that this has been done is, say, on the, you can see like 2/3 of the team is with advanced degrees, half of the team has experience in building unicorn companies. So this is like a creative way to do that. And below there are some logos of their other employees that you can highlight, right? The other thing that can be interesting to put on a team slide is as angels or funds or other backers, that believers that you've had. So who believes in us already? What is their depth of experience? Or talking through interesting stories or anecdotes around this can be super powerful, right? I think that's in the team aspect. And I think, and towards the end, I think we should talk a lot about our aspirations and ambition, which is just where we want to be, right? What is our inevitable future? So painting the vision of what we believe our future will look like, and not underestimating here, right? Like I think the objective is to be fully ambitious and bold. Again, if you are at a seed stage of something that becomes massive, then it can really be massive, right? So, and I'll show you an example in the next slide. So look at, like, this is Uber's sort of seed deck, like first pitch in 2008. So their best case scenario is like becoming a market leader and having $1 billion plus yearly revenue. And this is also something that they ended up underestimating, right? So I think pushing yourself to be bolder with what outcome can be derived with the insight and product wedge you have is very, very important, right? So spend time to really think about what can this become, and be bold, because if you're not bold or ambitious, you won't be able to get that opportunity or outcome that can come through the business you're building, right? Today, Uber's at around 17 billion in terms of revenue. Yeah, and I think last slide from my end is just very few pointers on just telling the right story, and happy to answer questions after that. But I think just 3 points here, right? So first is, I think most of you might know this. If not, it's always great to highlight it. So for any question or any sort of format of answering, I think it's always good to present the answer or conclusion first, followed by arguments. For example, if someone asks me, will you invest in them? There are two ways I can answer it, right? I can go like, hey, the team is very good. The market is very big, but the product is very early, and I'm not sure if this regulation will work out or not. So to the person who was asking that question, I didn't get an answer, right? Versus if I repeat my answer and say answer it in a different way, like, would you invest in this? And I just go like, yes, I will. I will invest in it because the team is interesting and the market is big. While regulations are a risk today, I think we can still go ahead and take that risk, right? So just starting with that, yes, I will invest, or no, I will not invest, is the answer to the question, right? So I think any of you with consulting experience would have seen this earlier, but presenting the answer or conclusion to the question first is super important, and then going into supporting arguments. A lot of us it's very intuitive to just start with, oh, this happened and that happened and this happened and that happened, and that's why this is my answer, right? Versus going like, this is the answer because of this is this. I think the second point is just giving examples to bring things to life wherever possible, so that your audience is able to visualize more easily. So in case of a customer persona that you're painting, right, maybe you talk about examples of how you empathize with that customer, or why you think you need to solve for that customer, and what is the real pain point that they're facing which you want to solve. So giving examples there can really help. Or even when you're showcasing your product, rather than just talking about it, demoing the product, walking through whatever you have in terms of stage of your product can be a lot more powerful, right? So giving examples or visualizing things or helping people visualize things is a lot more powerful than just stating facts. Third thing is just showing that you're iterative and learn from mistakes is much greater than presenting a perfect picture. So I think at early stages, if you are presenting to people, especially investors, they know that it's early, right? The expectation is not that everything has to be perfect, and it's not perfect, right? Even when I work with portfolio founders, there are so many things that keep changing. Ideas still keep getting pivoted. Mistakes are still made, but it's about backing people who are able to iterate from that mistake and find the right answer, right? So I think being a little vulnerable and showing that you're iterative and you learn from mistakes is more important than saying everything's sort of rosy, right? Yeah, I think that's all from my end in terms of what the content I had, but I'm happy to answer any questions.
Kshitij, thank you so much for sharing such amazing presentation. And I think many of the founders, they have been messaging me on personal ID on Discord that they are finding it very, very useful. So great session so far. Really good to see so many of the points you mentioned about how many of the global companies now, for example, Uber has had their early stage pitches sent out to investors, and how it was sort of not even recognizable at that point how these companies can completely flourish. And of course, of early startups as well. For example, Pillow, I think Arindam just joined the room when you were sharing about it. So it's so good to see really good insights from your end in terms of how you as an investor goes about seeing this. And I think we can just quickly open the floor for Q&A now. So we do have some questions coming up in the chat section. However, before we go into the chat questions, I would give permission for everyone to unmute themselves and ask. You all can raise your hand and I'll call you out by one-on-one. Even the people who have asked question in the chat section, feel free to raise your hand and ask Kshitij any questions you have. I think we have Nikhil here. Yes, Nikhil, you can go ahead.
Hi, everyone.
Hey, hi, Nikhil.
Hello.
Hey, Nikhil, hi.
Can you hear me? Yeah.
Yes.
Okay. Yeah. So I'm starting up for the second time now. I've been running an IT services firm for past 10 years. Did fairly well. The switch just started about 4 months back. We put in some money, my earlier investor and us, the two founders. And now the product is almost ready and we are ready to go to market. We are looking to raise the next round, and structure is in place. The existing founder is committing another round of 1.5 CR, and that's where the question comes in, that at what valuation we should give them the equity, and two, how do we structure it so that the upcoming institutional investors do not find it find it tough to invest in.
Right. So Nikhil, I think it's very contextual. It's very hard for me to give you a number at what valuation they should invest. I think it depends on the value this person brings to the table, right? As an institutional investor at very, very early stages, funds would want to own anywhere between, depending on the nature of the fund, it could be like 5-10% going up to 20-25%, right? And if there are a couple of funds, it can dilute up to 30%. So depending on the nature of this individual, the sort of long-term capital they bring to the table or the strategic value they bring to the table, you should take a call on how much equity you want to give them, right? And basis the amount of money they're investing and the equity that you are giving, the valuation will be decided basis that, right? So I think you should optimize rather on the money that you can raise from them, and also the dilution you are okay with, and that will lead to the answer on valuation.
Okay. All right. Thank you. Thank you so much.
Thank you, Nikhil. I think before we go ahead, I'll just have a quick information go out. So I see that many of you folks here have applied for Rize for YC program for their application review. Just wanted to inform you all that we have started our practice interview sessions now. So if you have heard from Rize for Y, if you have heard from Y Combinator for your interview, please feel free to schedule it for a practice session at Rize, and I'll just drop the link in the comment. Yes, I think apart from this, Raj, you can go next, followed by Arjun. And yes, we would move next then.
Yeah, hi Kshitij. This is Nomit from Byte Avenue. So I had a question around what things do you look for in a business model for an early stage startup?
Yeah, I think like at early stages, it completely again depends on the kind of company you are starting or which sector you're starting in. But it's a combination of the team that's building it, the insights that they have, and the quality of solution you're building, right? The quality of product you're building, and why that's interesting enough for us to see a path that it scales. Second is the sort of severity of pain point you're solving for. Right? If it's a deep enough pain point that you're going after, automatically a lot of people will be willing to pay for that solution, right? Even more than market size, I think I would say the severity of pain point is a lot more important, right? Like a company like Urban Company, when we invested at seed, the thesis there, like you can always say that market was too small to have gone ahead at the time, but the solution that they had was differentiated, and the pain point that they were solving is very real, right? And that sort of led them to scale up over time. So I think the combination of the quality of solution building, the quality of execution that solution has given you, like in terms of metrics you have, the team that's building it, the pain point you're solving, and ultimately as a consequence of all of this, how big an opportunity it is. See, ultimately how big an opportunity it is also matters, because if you're raising from venture funds, if our fund sizes are in the order of magnitude of 400, 500, 600 billion dollars, we want to invest in companies that can single-handedly return the fund, right? Because it's a high risk business, right? And the best of the best companies are able to give us disproportionate outcomes. So a lot of people have this question in mind, in the sense like, why do you need unicorns, or why do you need big companies, right? It's largely because of something like this, because the fund sizes are big, and we need to sort of, that's the sort of business we're in, right? So that's why market size and the opportunity size becomes important.
Great. Thank you so much, Kshitij, for answering that. Arjun, you can go next.
Yeah. Hi, Kshitij. First of all, great content, great insight. Thanks a lot for that. So my question is regarding the, so when you're dealing with the technical product, and let's say that the market is massive, but like most of the time you have to prove that you're you're different from any other companies that in the market. So what is your suggestion or advice, like what kind of slides you should have, or what kind of maybe slides you should not have when you are trying to prove differentiate? Because like the market is already listened, so you heard from everyone and you know very well about it, but it's too technical and kind of a API business where you're very little differentiated from some other companies.
So the question on how do you establish your differentiation?
Yeah, how you
And
articulate. So basically, it's the articulation related to the articulation. What kind of slides you do have, or what kind of exit points you should put. If your so investment firm is maybe your partner is not that much technical, or not have the enough idea about the vertical, and then you because first time you just go to the mails and you have to present the idea very well enough so they can actually understand it genuinely.
See, I think it's an iterative process, right? I think you need to really simplify, or like that Reddit subreddit you have explain like I'm 5, right? So if you really keep pushing yourself to simplify your idea enough to say that a 5-year-old can understand it, or someone without any technical background can understand it, that's just how easy it can be to understand, right? So it's like, say this is Uber for trucking, then okay, it's on demand logistics or freight operations that you're booking, right? So, or it's like, say, Web3 for everyone, or making industries intelligent. It doesn't need to encapsulate the depth of your technology all the time. I think if you captivate your audience enough initially, they will be automatically interested to understand more about your product. So I think you solve for how you captivate people enough and make it super easy to just fit in. Like it's just a pre-digested product, right? I know it's oversimplification, and sometimes people might feel that it doesn't do justice to my tech, but I think storytelling is a very different art. So if you look at, say, videos that Steve Jobs does, right, it's very easy to understand them. Or say if anyone else who communicates very well or sells very well, right, it's very easy to understand them because it just fits, right? So I think you just have to keep pushing yourself to make it simpler and simpler to get anyone to understand. And then if something like Uber for trucking, it just hits you, right? In the sense, okay, that can be big. There's nothing like that today. And I'm interested to know more, right? And then you talk about the depth of the tech and the solution that you're building.
Okay. Thank you.
Great, thanks, Kshitij. So we have many questions coming up. Many folks have raised their hand, and we have many of them in chat section as well. Also, just being mindful of the time here, so I'll just quickly call on a few of you until we have time left. Neha, you can go next, followed by Utkarsh, followed by Shubham.
Sure. Hey, Kshitij, thanks for this presentation.
Hi,
First,
Neha.
I wanted to know at the seed stage, what are investors looking at, and are angels needed at the seed stage?
So I don't know if you heard the previous answer I had given. It's going to be similar at seed also. It's a combination of I don't know, when you say seed, has your product been launched, or is there a product at all, or
So
is
there's
it
a
just an
community.
idea stage?
No, it's a community. There is no product yet, but a community of, let's say, 1,000 people, and with some sort of revenue.
Yeah, sure. So I think it breaks down into the same fundamentals. So one is again the kind of insights that you guys have in terms of what community you're building and why that is important today. What pain point is that solving? Is that a real pain point or not? And even if it's not a real pain point as such, but if the kind of way you're solving it is so much better than any existing solution out there, that people would prefer your community, for example, right? So I think the quality of the solution that you have, the pain point you're solving, becomes very important. And back the underlying layer to all of this is the team, right? The insights that you have to build a good solution and solve the severe pain point that you have. And I think the second level things to see if it exists is the traction that you showed, right? In terms of the growth of the community, the revenues are driving, the engagement of users in the community, the retention of users in the community, right? If those exist, the second level metrics are always more powerful than saying I'm at 1 million users or 10,000 people or 1,000 people, right? But if I have a set of 1,000 people who are very engaged and show promise to drive a lot of long-term value for the company, it's more powerful than saying I have 1,000 users who won't exist tomorrow.
Got it. That helps.
Okay, yeah. Hi, Kshitij, Utkarsh here. Thank you so
Hey,
much for the
Utkarsh, hi.
session. Yep, and especially the examples that you showed from so many pitch decks were very, very insightful, and I think very lot pop, gave us a lot of ideas in our head as well. So that was awesome. Thank you so much. So just a bit of
Great to hear.
background before I share my question. So what we are essentially trying to do is make quality financial advice, private banking level of financial advice available to the masses, and we are doing that by building a robo advisory platform that does comprehensive financial planning. Right. So in terms of the founding team and the so to say the experience that we've had so far, so we are first time founders, right? And we also don't have traction, and we're building a fresh product ground up, and we are still pre-revenue, right? So I mean, I won't go again into the same challenges of the seed stage that you've been talking about, because you've repeated those multiple times, but I'll split my question into two parts. So in terms of our time commitment to the fundraise process, right? So we made a call to not focus too much on so to say institutional funds for the time being, and raise a bridging round or a pre-seed round from angels first, and focus on building that, establishing the product market fit, and really building that initial traction, right? So two questions I have is, do you think this approach is right, in the sense that that's the first part? The second part is, if we were to pitch to a lot of VCs, and if they tell us we are too early for them, or we get rejected at this stage, do you think that would close future doors for us with the same VCs, right? That's the second part. And the third part is that, in terms of traction, right, and an initial customer base, what would be a respectable customer base for us to reopen those investor conversations? I mean, the institutional conversations again. Would it be 10,000, 20,000? What would be, is there a magic number or some guidelines that we can use? Yeah. So a lot of questions in one, but
Right.
yeah.
No worries. Thanks for asking, Utkarsh. I think your first question, I forgot to answer Neha's second question also. I think one is, maybe let me answer her second question and then I'll come to yours.
Sure.
So one is, angels are not necessary for institutional fundraise, right? So you can always go to approach a VC, especially us or any other VC, without angels. It's completely fine. And most of the times when we do invest in companies now at seed, we do keep allocations for angels. If you need any strategic angels or people in our network or founders in our portfolio who are more scaled up, if they want to invest, you can always do that. So that's to answer her question. I think, Utkarsh, to answer your question, I think one is, going, like, it's completely your call if you want to go to by the angel route today, or if you want to go and approach institutional. I think what you need to solve for at both is finding good people you want to work with, right? Because if you're diluting some equity of your company, it's going to be a long journey, right? It's going to be if you're building for the long run, it's going to be a 5-10 year journey where that investor will be on your cap table. They will have a say because they own part of the company, right? So I think whether it's institutional or whether it's angel, I think it's important to find the right person to work with. If it's so early that you're not able to get any institutional funding, or the angel is the only route, or you really prefer certain angels and you're getting enough capital to suffice for your current short-term goals, then you can go ahead with the angel, right? Any of those scenarios. There is no right or wrong, right? And I think, like, going to VCs, pitching, getting rejected does not mean you will close doors in the future. Like we do seed to Series B. A lot of the companies that you see on the slide, we invested in Series B and we passed them in seed and Series A, right? Like if you see some recent investment we did in Mintify, we posted it on our memo as well. We had evaluated in seed, we didn't do it. We evaluated in Series A, we didn't do it, and we invested in Series B, right? We had to pay up for it. We had to pay a lot more, but it was worth it, right? Because as a fund, we want to come into companies where we have high conviction and stay in for the long run, right? And it doesn't do justice to put in small option checks at early stages and see how they do, but rather come in and work closely with the teams when the time is right. So
makes sense.
It doesn't close doors for you over time. If if you do iterate well, show something which was lacking with the first time you got rejected, then it can always happen, right? And you always just need one believer at every round. So 199,
absolutely,
but one say yes, you have your money, right? So that's another important thing to remember. Yeah, and the third thing is, there is no magic number, to be honest. As I said earlier, one of the answers doesn't matter if you have 1,000 or 10,000 or million users. But if you have a million users and low retention and low engagement, it's worse off than having 10,000 users and having super high engagement and super high retention, right? So I think it's not going to be a point in time thing, right? It's about building a case for the future as well and seeing long-term potential in that business, which comes through seeing high quality engagement and deeper metrics at early
Right.
stages, right? And which is why SaaS companies are exciting for a lot of people, right? Because of recurring revenues. Because any sort of existing revenue is going to repeat and keep expanding possibly, and the new revenues are always going to add on top. So
Got it.
it just grows much faster because of that. Same for your business as well. In robo advisory, AUMs also snowball. So it starts coming in, and then existing investors keep investing more, and over time, new investors will keep adding money. So it starts snowballing very soon.
Right. Awesome, Kshitij. Thank you so much. So focus on the quality of basically customers that we have in terms of low CAC, high retention, and things like that, rather than large number, if I hear you right. Okay, that's awesome.
Correct.
Thank you so much.
Yes. Thanks, Utkarsh. All the best with the launch next month. Kshitij, if you have more time, would you be able to extend the session by 5 more minutes? We have some more questions coming.
Yeah, sure. I can extend, yeah. Even if you need for 10-15 minutes, we can go.
Okay, amazing. So Shubham, followed by Anish, followed by Kunjan.
Hey, Kshitij, very helpful session. And especially also the questions that other people are asking, they're very useful. I think gives us a lot of insight. Thank you for that. So my name is Shubham. We are building a kids mealtime gamification app. So the question that I have is sort of, I don't know if it really qualifies as a product direction question or a pitch deck question, but so the thing is, we already have a decent story. Whenever we talk to people, they understand that, okay, it's a mealtime gamification and how we are trying to monetize and stuff like that. So that story is like pretty coherent. But I do feel that at some point we might get into the Web3 and we feel that our story really fits into that whole metaverse story or the Web3 story very well. So do you, but right now, all we are doing is we are all validating our social and, all the, let's say, in-game economics and all those things are in Web 2.0 for now, right? So do you think that, we will increase our chances of getting more attention if we just mention Web3 and say, okay, it'll be done at some point in future? And what percentage of our deck should we contribute that to? And it's just a general question about buzzwords, right? Like, should we focus more on the stories or should we focus more on the trends? So yeah, that's my question.
Yeah. And when you say more retention, that's in the customers, you're asking on the customer side of things, which
no,
investor side of things.
No, I meant attention, not retention. What I was saying was that, while talking to investors, do you think that we should talk about it? From customer side, we know that we are not going to go there anytime soon because we are still validating our ideas and we are not there yet. But while we're talking about it to investors, is that a direction we should go in?
Yeah. See, I think it's a very thin line to navigate. Like being very bold and captivating can make you a great seller, but a lot of people who are scamming you also have similar skill sets, right?
Yeah.
So I would not recommend putting in buzzwords just for the sake of it, because it just I would only put it if it's a legitimate part of our roadmap and we are going deep in it, right? Or we have expertise in it, or we have thought through our plan in it, right? Because if like this presentation was to show you that sort of structure to captivate someone, but it needs to be followed by the insight and product, right? Like it sort of creates this conspicuous way for you to grab people's attention, but it needs meat behind it, right? So you can use Web3, etc., and metaverse if you really have some meat behind it. But just using it and not backing it up is not great for. It's not long term. It's not great for success, right? Because cool, I'll be interested in one call maybe if you do something like that, and the next call if I go deeper, maybe you don't have anything to say. So then it automatically becomes a negative signal for me, right? So I think buzzwords is again like that thin line, right? Like there's both pros of sort of getting attention, but con is that it is a buzzword, right? So everyone needs to have more burden of proof to say that they're doing something there.
Yeah, makes sense. So do your homework and then put it there. That sort of is what you say.
Yeah. I think while the deck or the presentation is structured in that way where you like showcase, captivate first, and then go into your meat. I think the development process is opposite of that, right? Like you build deeply, and then over time you find ways to present your work in a more attractive way.
Cool. Thank you so much.
Amazing. I think Anish, you can go next.
Yeah, thank you. Thank you, Aditi. So, hi, Kshitij. This is Anish from Vendify. So, we are into B2B retail tech SaaS. And the time we started the plan, we started with there has to be 6 vertical or 6 products, which will be codependent on each other, but can also go individually. So now we have like early signs of product market fit, and the customer love is also there, the kind of testimonials you were showing. So my question is more around pitch deck. So when we are creating the pitch deck, shall I start the pitch deck with like vision of all 6 products or verticals in a single go, and then showing that we have signs of PMF in this one vertical? Or shall I start with that vertical and then show, like it's kind of, shall the pyramid be inverted or the other way while we are sharing the story? So that is one question. And the second question is that, like, so I went into elevation as well, but I didn't see anybody who's investing in retail tech or IoT or deep tech sort of specifically into these sections. So anybody who invest in, or whom we should pitch there for these particular verticals. So these are the 2 questions.
Yeah, no, great question, Anish. So I think one follow-up question I have to that is, your 6 products, are they adjacent to each other or are they disparate?
Yeah, it won't affect. Like they can go parallel.
They're different completely.
Yeah. In the longer version, we are thinking even they can be, like, say, a separate suite, like Zomato has a Hyperpure, which is a separate suite. So
got it. So then I would recommend you focusing only on that one product which has some traction first, and saying that this is our initial product which has shown deep success. And through the success of the initial product, it gives me the opportunity to go into 5, 6 other products and get a larger size of outcome, right? So that's how I would do it, honestly. Given that in the other 5, you don't have any deep product market fit yet to show. So I would start with that one thing, which is like the wedge, and then go deeper to say that with this wedge helps us unlock more revenue streams over time, or more product streams over time, or gives us an advantage to build something like a Hyperpure, right? Because we have relationships with the restaurants, something like that. So within Elevation, so Detect, which is a company I spoke about a lot, is also in the IoT space. So I do a little bit of industrial IoT, but our SaaS team does a lot more of the retail tech and IoT that you were talking about. So you can talk to any of our members in the SaaS team. So Akash Rathi, Akarsh Srivastava, Ayush Agarwal. So just reach out to them. You'll find details on the website.
Amazing. Thanks, Kshitij. Kunjan, you can go next, followed by Raj, followed by Gagan, and followed by Ankita, if we have enough time. Yeah. Yes, Kunjan, you can go next.
Yes, thank you, Aditi. Thank you. Hi, everyone. Hi, Kshitij. Thank you for sharing your fresh take on a structured guide on combining storytelling to pitch deck. We'll surely be using it, definitely. It was very helpful. Thank you so much. So my company, Sikka, is developing a mobile app based on a mobile app-based platform to help offline retailers market their brands, leveraging cashback and referral strategy. We are launched and iterating. Our ideal metrics is monthly recurring revenue, MRR. However, at this point, we have validation on will the mass population recommend offline businesses for a tangible rewards on the platform? So that's the validation we have, that it was a resounding yes, and it's viral trend. They're loving it. My question here is, talking to users currently is a very resource intensive process, and it's a very manual process. We do not have a product market fit yet, as in the product does not speak for itself because it's a marketplace. It still requires a lot of sales team and a lot of pushing on the ground. Would it be a good position for a company to raise a seed round for iterating purposes on product market fit? That was the question.
Yeah, Kunjan, I think a lot of seed investments that we do or any other fund would be doing would be pre-product market fit many times, right? Sometimes if there is some product market fit, it is great. But once you do reach that PMF stage, and if your market is big enough, the opportunity is large, you start growing very fast, right? So you need larger amounts of capital to support that journey. So it no longer becomes seed as such. So many of the paper plan investments we do or pre-launch investments we do, which is a lot of our bread and butter, right? Which is seed, are going to be pre-PMF. I think it's just a bet on the team and the thesis that they're solving. And and then over time working with them closely to help them reach PMF is important, right? So definitely, I think if you have the thesis in place, sorry, one sec. If you have the thesis in place and the team to an extent in place, I think you can think about raising.
Thank you so much, Kshitij. Thank you.
Yes. Kshitij, would you like to stay in the session till say 5 more minutes? 8:45.
Yeah.
Is that okay? Great. Raj, Gagan, and Ankita, we can take 3 of your questions by then.
So, hi Kshitij, how are you? Yeah, hi. So I have I have a very small question with you, Kshitij. I just want to understand, after seed to Series A, any time break required?
No, I mean, usually companies do use that capital to execute a lot more and show better traction, which leads them to reach higher stages and raise more capital, right? So the time break is to use that capital, right? Otherwise, you will be diluting a lot more at a lower valuation. If you execute a lot more and reach a later stage of the company, you can dilute lesser equity, right? And give away less of your company to investors. So you use that capital to scale up and raise larger amounts of money for smaller amounts of dilution, which increases your valuation. That's why you raise, right? Like, I mean, you raise for using it and growing.
Understood. Thank you very much. Thanks. Yeah, thanks.
Awesome.
Over to next one.
Hi, Kshitij. Gagan here from Byte Avenue. So in your presentation, which was a great one, by the way, and you highlighted that it is important for us to share our metrics once we have our insight on the product, right? And share our growth and metrics. So for an early stage startup, which is getting traction, but has nothing conclusive yet because it is an early stage. So how do we present that data? Like, how do we present our traction or growth?
Whatever your highest level metric is, you can show that. If there is, could be number of customers, which could be revenue, which could be anything top line, right? Which is the highest level. If that also doesn't exist, customer validation can help to say that, okay, we are pre-revenue, but say XYZ pilot that we did got resounding success. It increased the client's efficiency by 30%, reduced cost by 20%, something like that, right? So that's also some form of traction or results that we drove because of our product. Yeah, I think if I don't know what stage you're at, if both of those, I can help you contextualize more if you can give me more details. But I would say if there's some form of data, but it's very early, you use the most highest level.
Like we've started rolling out our beta invites like about 3 to 4 weeks, about a month ago. So like right now the percentages will obviously be high, but because we are going from 0 to 1, right?
Yeah. So yeah, people understand that, right? Like growth rates will be high at low bases. I think it's about saying, okay, if it's like beta launched, do we have a wait list, for example? How big is that wait list, which is an indicator of interest? Or I think you just start finding proxies to show interest levels, right? Or say that we have, while a product is being launched, we have so many Twitter followers, or we have this community which is this big who are engaging, excited about a product, or we have spoken to a bunch of customers who have validated the need and are working with us to build a solution. These are big companies who we respect and the world respects. So something like that. I think you just find proxies to show that there is more and more validation and excitement or buzz or waitlist or any form of thing for this product.
Right. I think that answers my question. Yep. Awesome. Thank you.
Ankita, please go next.
Yeah, hi Kshitij. So Kshitij, I have essentially two questions. One is, so we are a marketplace for handmade artworks from artists across India, and this essentially is into home decor segment. Essentially fits into home decor segment. When we talk about the market opportunity, we talk about TAM, SAM, and SOM. So for me, this TAM becomes very huge and sort of unrealistic when I look at it. So how do I narrow it down to a realistic level when I'm presenting it to an investor? That is my first question. And the second question is that we have a use case in both B2B and B2C segment. I think you have partially answered that question. So do I include that in the market opportunity of both, or I just show the one where I have more focus and more traction initially? So yeah, these are the two things which I have.
Yeah, no, that's a great question, Ankita. So I think one way to do this is to represent it like, you remember the Breck slide, I don't know if you do, but that initial orange circle going to a larger gray circle. So that is one way you can say, okay, today for this target customer set I'm doing, which is a subset of B2C, for example, it is just this big market, which is reasonable number. But if this succeeds, that means I can take a large share of whatever commerce volumes there is, which is a very massive number, right? Which is what Breck spent like, okay, I'm starting with tech companies, but then if I make that successful, I will do global B2B payments. Global B2B payments is massive, right? Like, but you can always show that number as an extension if you get the first thing right. I think the same thing applies for B2C and B2B as well, right? Like, I think you cull it out in the sense that, okay, this is the B2C market I'm going after. Within B2C also, you can say this is the kind of customer segment I want to go after who spends this much. That's why my market is this much today. But if I crack this customer segment in B2C, I can expand more into B2C, then I can go into B2B because I have the network effects, right? So I think you just either you sequence it or you show that today the opportunity is this, which is for our wedge product or initial product. But if I unlock this, I can think about a much larger ball game of a big commerce product, right? I don't think you refrain from showing the larger vision.
Sure, thanks. I have one more question, Aditi. Just 1 second. I think you showed a slide earlier where those rejections email or rejection letters for the founder credit card, right?
Yeah,
so is it okay to share? I mean, we have seen and come across a certain problems statement or issues online. It's not ours, I mean, but we from the competitors or from the other in the industry, we've seen these sort of proof points. So is it okay to use those things in the slide without any confidentiality or some violating anything? Because we've been refraining to use all those things so far.
Yeah, there's a call you need to take. I mean, it's like some of these are gray only. Again, like this is something they can probably talk about. If it's the founder who applied for a credit card and got a rejection letter, there's nothing sensitive about that information. And then they are saying it's just representing, right? And you saw a lot of things were read out. So I think if it's a small competitor who might, like, it's a judgment call. I don't know who you're talking about, but if it's a very large institution, mostly it's a too small a problem for them to care about. So you can go ahead. But yeah, if it's something small, very direct competitor, then it might be a problem, right? Or you just anonymize it and you just share the feedback. For example, if you don't like an app and you see the app store feedback is terrible, you don't need to name the app, right? You can just say a competitor in the space and people will understand. But you can show the feedback that they're getting, maybe. Like, I don't think it's nice to be completely dismissive of other people's product also. So that maybe you don't need to do. But like, yeah, maybe that judgment call you'll need to apply. I can't give you a prescriptive answer on that. These are like very large institutions, right? So I think it's completely fine here without divulging personal information.
Right.
Great. Thank you so much. Yeah, thank you so much, Kshitij, as well. Subodh and Chintan, I'm so sorry that we are almost on time. We would need to miss out on your questions. And any other question I missed out on chat as well. Really sorry, we have already extended the session. So, folks, if you all can just turn on your video, we have a community ritual at Rize to take photo with the speaker after each of the session. Would just quickly do that and I think then we would be good to go. Amazing. Good to
Yeah,
see
and if you have any questions, guys, you can DM me on Twitter or somewhere I'm at. I'll just post my Twitter ID. Maybe that'll be easier.
Yes. Amazing. Thank you so much, Kshitij. I'll quickly take a screenshot if you all are ready.
Sure.
Yes. There's just one more. Great. Thank you so much, everyone. This was an amazing session. Kshitij had put in a lot of efforts for this session already. So thank you so much for that. I really appreciate your time. And thank you so much for extending it as well. Many of you are asking for recording and presentation. We would not be able to share the presentation of this session because of confidentiality reasons from Kshitij's end. But I'll update you on the recording and the notes for sure. But thank you so much for joining in. And it was a pleasure to host all of you. Kshitij, thank you so much for your time. And
thank you, guys. Thanks for organizing this. Very, very helpful.
Yes, thank you so much, Kshitij. I'll see the Rize community again soon, and have a good evening, everyone. Thank you so much.
Have a great evening to you too, Aditi. Bye.
Thanks.